What's up, guys? It's Rey-Jay back with another video. And in this one, I wanted to break down what's happening with SPY, Tesla, Nvidia, the QQQ, and a couple of other tickers. I'm going to break down some big data that's coming out for tomorrow. It's going to cause a big move for the markets, what to be looking out for when it comes to news and such, and how things are looking, my personal opinion on the charts. But just know that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please smash the like button. It not only benefits me, it benefits the entire community as a whole. Anyways, right now on SPY, we're attempting to uptrend right here. We did have a slight green day, but SPY is range bound alongside other stocks out there. So the question is, which level will we break to see a bigger move? And what should we be watching for as time goes on? I'll be giving you guys all the answers, at least moving forward. But let's first talk about this data. It's going to be very key for tomorrow for the markets, and it's going to have a very, very big effect. So tomorrow at 8:30 a.m. Eastern Standard Time, 1 hour before the market opens. And by the way, tomorrow is Tuesday, August 13th, 2024. By the way, when all this data comes out, we're expecting a big move, and it's coming out right before the market opens. So for month over month, we're expecting PPI for all items to be around 0.1%. And then for core PPI, we're expecting 0.2%. In my opinion, they're most likely going to be close to expectations. And from what I'm looking at crude futures, but I can't say it with 100% certainty. It really depends on the data. I know that data could be very manipulated, so you can't fully trust everything perfectly. But just know from what I'm seeing, there's a good chance things will be okay, not too elevated. For core PPI, year over year, we're expecting a big range between 2.7 and 3%. It's a pretty big range. We're most likely going to be aligned with expectations. I think there's a very good chance of that looking at how big the range is. But there is a risk of it being on kind of like the higher end, somewhat higher end year over year. And the same thing could be said about PPI. PPI, we're expecting this for all items year over year to be around 2.3 to 2.6% for all items. And this will most likely be, I would say, in between, maybe a little bit higher. The reason I say that is because I think the data is going to be fine, but possibly on the a little bit of the higher end of the forecast. And the reason I say that is because of what I'm seeing right here. It might not be too bad for the markets. The market may get a decent reaction. So, from what we saw, looking at the data in June of 2024, okay, crude oil futures was at 78.71 and it increased just a little bit. So, we saw crude go up just a little bit. It's about 80.56 for the month of July. And that is something that's worth noting. A slight itty bitty increase could have somewhat of an effect on inflation, but it might not be too much, might just be very, very minor. Now, why am I bringing up crude? And the answer is there's a high correlation between CPI and crude. If you look at how they've been moving, they tend to move very, very similarly. So this makes me think that when the data comes out, most of this should just be aligned with expectations, maybe on the higher end for some of these, such as the year over year forecasts, because they're very close to what we got previously. So, for example, core PPI year over year, this might be closer to 3% when this report comes out, maybe 2.93% like that. And then for year over year, I'd be looking for like 2.5 to 2.6% for all items, which is still aligned with expectations, but just on the hotter end of the spectrum. Just wanted to call that out. Now, why is this important? Why does this data matter so much? And the answer is it's going to affect the Fed's policies. Right now, the market thinks there's a 48% chance we get a 50 basis point cut and a 52% chance we get a 25 basis point cut by the month of September. Now, the Fed made the decision, which was to not cut rates during the FOMC meeting on July 31st. This is very important because now we have to wait all the way until September till we get the decision. And the Fed is going to continue to keep things this way unless something breaks in the economy and something very major or catastrophic happens for them to have to cut early. But so far, that does not look like the case. And the market's going to determine what the Fed is going to do based off this data. So tomorrow is going to be one factor. And then on Wednesday, don't forget, we also have CPI. That's going to be another big factor, which I'm going to talk more about that later on. Now, there's another big factor for the markets, and that's going to be what's going on with the whole situation involving Iran and Israel. Not going over the whole history, but just know that for now, Iran is threatening a retaliation attack against Israel. That is the truth. With all of this going on, I mean, if there is some kind of attack that happens overnight or who knows when, the market's going to get a big rug pulls. This is another big factor to account for. I personally am not like over leveraged right now. I'm very, very careful with the markets. I'm being very, very patient right now, and I'm waiting by reducing some positions and by um, just giving it some time just to see how things kind of like develop. So I find that's to be a lot more efficient, a lot more effective. And I think that when it comes to the way things are moving, this is another external factor you have to be ready for just in case something happens. Now, when it comes to earnings, I went over the majority of these in the morning. Monday.com did very, very well. We have TerraWolf as well and a few others, which aren't really too crazy. I'm going to be more focused on Tuesday through Thursday when we have like more retail, such as the Home Depot on Tuesday, not to mention Dole and Cisco on Wednesday, then Alibaba, Walmart, JD, and John Deere for Thursday. So we'll see how things go. Last thing I want to talk about is the fear and greed index. Right now, extreme fear is still making up sentiment. Momentum is still building as the market is trying to get bought back up, but now it's waiting. It's waiting to determine direction depending on PPI. Right now, the puts and call option positioning is dipping a bit. We're seeing some more puts being closed, some profits being taken. That's no surprise considering how much the market had dipped before and the fact that the market's still holding up. So, in my personal opinion, I think that we're going to be looking for a big shift in these indicators depending on how things go. And the VIX is still trying to hold support, so I will talk about that later on. Anyways, now let's talk about the charts. What do I think is going to happen? So, honestly, guys, here's what's going on. SPY is on an uptrend. Technically, it's on an uptrend. We had this slowdown here at 507. Look at the last week to week and a half, making a higher high, higher low, higher high, trying to uptrend for the last couple of days. That's great to see SPY attempting to uptrend, but the thing is, now we have a tough resistance in this 535 area. That's our 50 EMA, this yellow line you see right here. If we're bullish, we need to break the yellow line and go up to 538 or higher. Then we'll be looking for potentially this gap fill all the way up to about 540 if PPI and CPI help the market pump. If the opposite happens and we get a rug pull, look at 530 as key support. If that breaks, this thing's going to be dipping all the way down to at least 525 in my opinion, if not lower. So there's going to be a big drop coming if 528 breaks. I'm sorry, if 530 breaks, then there's going to be a big drop. 528 is the next support, but that's not as strong. Our 20 EMA is where the support is, so we'll watch and see if that breaks. So what do I think is going to happen? Honestly, guys, I don't truly know. That's my honest assessment. I don't truly know, but I think there's a good chance PPI is going to be decent in this market. Might try to hold up. So I favor that a little bit more. We get a decent PPI and the market holds up, but you never know, guys. So you want to just be open-minded just to be safe. So watch your levels just to see. The chart is still in the upwards direction, is technically speaking favoring the upside. So it's favoring trying to break past 535 to get to 538, but nothing can be promised as it depends on the data. For ES, it still has this wedge that's forming. So that's kind of like a bullish wedge like structure. It looks pretty decent right now. It's kind of favoring bulls a little bit more, especially as we're breaking these trend lines. So, yes, we are technically speaking a little bit more bullish. We look a little bit more bullish. Looks like it's trying to break out right here. But in order for us to break out, we need to try to get back above 5380. If that breaks, I'm going to be looking for the 5400s. If we end up losing structure, we have to lose 5340 to start turning bearish. Then we'd be dipping all the way down to the 5300 area. So right now with the wedge that's forming, I think that ES is technically speaking, it's favoring upside a little bit more, trying to get up to the 5400s. It looks a little bit more bullish. Now, that does not mean just YOLO into calls, jump in because you expect the market to go up. I can't promise that. Okay. I can't really promise that because I don't truly know what CPI is going to look like or even PPI. So although the charts are favoring the upwards direction, it looks a little bit more favorable, especially because crude futures data is decent. No promises could be made. We'll just have to wait and see what the data tells us, despite how the charts are kind of looking. For SPX, we're kind of like hovering around this trend line right over here. We have our 20 EMA as resistance at 53.50. Notice how we were trying to break this. We haven't been able to do so thus far. So I think each of these EMAs are going to be tested. At least one of them will be. If we're bullish after PPI and CPI, we could be looking for the yellow line to be tested, the 5400 area. If we're bearish and get a rejection, we're going to be dipping all the way down to 5300 flat. For this rug pull, if that breaks, we'll be looking for a bigger drop all the way down to 5250. Looking at the way things are looking, we may attempt to go a little higher. It is looking like it's trying to uptrend from here, making higher highs and higher lows. So it does favor the upwards direction a little bit more right now. But I can't promise anything because, like I said before, it depends on the data. Things are still kind of indecisive, so give it some time. We'll see if this gap fills or not. So we'll just have to wait and see. That's the best thing I can tell you, despite the uptrend that is still present. For Nvidia, honestly, guys, it looks bullish. Why do I say that? Look at the trend. Nvidia, technically speaking, looks bullish. We had this low here, made a higher high, higher low, higher high, forming a nice bullish wedge. So you can actually draw this out just like this. Looks more bullish. If we draw it out like this, we're looking pretty good right now, right? Nvidia is favoring this uptrend. It looks like it wants to go up to about 113. That's going to be where our 200 EMA happens to be. So it's favoring upside, at least technically speaking. Now, if we get a bad PPI and we get a rug pull, Watch 105 if we lose that. If we lose 108, we're going down to 105, then eventually lower levels, such as 102, if we get the rug pull. If we're bullish, you want to see us push all the way up towards this 113 area. In my personal opinion, I think that we are favoring the upwards direction, at least from a technical standpoint, but nothing can be guaranteed until we see what happens with PPI. So just want to keep that in the back of your guys' minds. This looks like an accumulation as well right over here that's been forming. So this is technically speaking looking more bullish. Do I know it's going to go up? I don't know for sure. It depends on the data, but technicals do suggest upside is a little bit more probable. For Bitcoin, Bitcoin is technically on an uptrend, but there's one issue. The resistance between 60,000 also 62,000 is kind of tough. Notice how we rejected off 62,000 a couple of times and we failed to hold above 60,000. If we lose 57,650, I think this is going to likely start dipping lower. And there's going to be a risk of us coming all the way down to the 56,000 area. If we break above 60,000, there's going to be a nice bounce back up towards 62,000. This chart is favoring a little bit of a push back up to 60,000. So we'll just have to see how things develop, at least from here. For other factors, we have Tesla. Tesla on the 4 hours looking okay right now. It's just kind of stuck in the middle. I would have loved to see this setup with the inverse head and shoulders play out, and it's still a possibility, but it really depends. If we break 200, 199.9, this thing is easily going to be pushing up for 205 tomorrow. If we lose 195, look for a rug pull to this imbalance, taking us all the way down to 191. It really is that simple. Now, one could argue we have a double top like structure on Tesla, so we have like this top here, another top here, and this is going to like start dipping. It's a strong possibility. I'm 100% open to that. This will depend on PPI, but I just want to say that Tesla's not looking that great. It's really struggling to break this 20 EMA, the green line. See how it's rejecting, so it's not looking that great to me. It's favoring downside a little bit more now, but we'll see depending on the data. For NQ, okay, this looks bullish. NQ looks a little bit more bullish to me. This is trying to outperform some of the tickers out there. So what I like about this would be the structure like this. You could form a nice looking wedge, and then this would technically be favoring the upside direction. So with this nice wedge that's forming, this would favor a nice push all the way up towards at least 18,750 or higher, close to 19,000. It looks a little bit more bullish, but if the opposite were to happen, if we end up losing 18,500, we're coming back down here towards 18,200. So it depends. Yes, technicals look a little bit good for the NQ. They do favor upside a little bit more, but this could be a trap and this could be, not sufficient. So that kind of gives us the possibility of downside as well. So yes, technicals look a little good, but I'm not going to solely trade based off those. It depends on the data. Technicals do favor upside as well. On the QQQ, what I like about this is we did push, but now just like SPY, we're stuck between our EMAs. If we break 454, look for the gap fill for 457. If we end up rejecting, look at 448 as support. If that fails us, we're going all the way down to 445. Which way is looking more probable? In my personal opinion, we're kind of stuck in the middle, but the QQQ has an uptrend, so it favors upside a little bit more. So we'll see if that breaks or not. And then also, I just want to note that from the way things are looking, we are favoring upside a bit more. So the QQQ and NQ look a little bit more bullish, technically speaking, but depends on the data. I can't make any promises about that. For Aapl, we look a little bit more bullish as well, as we're trying to hold up above support. As long as we hold support tomorrow, we're going to be fine. But if we don't hold it, things will shift. So Aapl looks like it wants to go up to about 220. It does look like it wants to reclaim that. But if we get a rug pull and we lose 215, look for a dip towards 212. We'll see which way we break depending on our data and such. So give it some time. And then we want to be very, very patient nonetheless. Palantir looks a little bit more bearish to me. We kind of pumped about 31 only to dip. I think we're going to be testing 28.5, and then we'll see if we bounce off that from a technical standpoint. It depends on PPI, but just know that the chart is suggesting a little bit of a dip towards 28.5, and then we might be looking to see if we bounce or not. Supermicro is looking pretty good as long as we hold above, and this depends on the data tomorrow, but if we could hold above 540, the 20 EMA, I could see this going all the way up towards these highs up here in the 560 area. If that breaks, we're going up to 580. So watch those resistance levels. If we don't hold 540, we'll be dipping all the way down towards 520. We'll just have to see which way we go. But looking at this, we are trying to uptrend, trying to break through, and I think that there's a good chance we could continue from here. So that being said, I think that there is potential in Supermicro to try to bounce. We'll see if that ends up being the case. And if it's not the case, then it is what it is, but just know that Supermicro has potential. With that being said, I just want to make it very clear that Supermicro has bullish potential. I think it could try to rebound, but it all depends on the data. So I like the setup, but that's all I'm seeing for the time being. For Rivian, this looks a little bit more bearish. And the reason why it's bearish is because we're about to break structure here. So you could take a trend line like this to kind of draw it out, probably from like right here. We had this wedge like structure that was developing as well, and that's kind of like failing. So what I'm going to do is let me just delete this real quick. I'm seeing a very, very bearish looking structure here. Notice how it's just rejecting, 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 just like this. And then we have this support right here. So when you're losing the support here, this is what's going to lead to more downside. I think that the odds favor this breaking even lower and testing around the 12s. So we're looking a little bit more bearish, technically speaking, on Rivian. This depends if we lose structure. We look like we're about to break this line right over here, the support. So the 12s will likely come if that ends up being the case. So it is what it is. We look more bearish. Yes, it depends on PPI, but the technicals are still suggesting that. SoFi looks a little bit weaker. We had a double top, and we've been kind of rejecting here. In my personal opinion, I'm going to be looking at key support at 6.25. I have resistance around this 6.75 area. If that breaks, we're going all the way up towards 6.8 and eventually 6.95. And if we lose support, we'll be dipping all the way down towards 6.25. Looking at SoFi, the 4 hours looking a little bit more bearish. I think this favors downside all the way down to 6.25. So I think the downwards direction is a little bit more probable for SoFi, and this might start dipping a little bit. Looking at the way SoFi is moving, I favor downside a little bit more. So we'll see if this imbalance ends up getting filled. Now, it depends on the data, but just know we still look more bearish, technically speaking. I'm also a little bit concerned about the IWM. It was kind of lackluster today. This looks like, to me, we have a double top and we're looking a little bit weaker. We're just barely holding the support. I had this drawn out yesterday, so we've been respecting this. We have to bounce here. We have to bounce off the support. If we don't do so, we're going all the way back down to 201. Okay, so it has to bounce here tomorrow. If we get that bounce, we could continue to maintain this wedge and a bullish structure could be developing. If not, we turn bearish. I'm a little concerned. I see a risk of it kind of like dipping, especially as we had a red day despite the market holding up. So I see a double top, and I think there's a risk of it rejecting, and it might invalidate this bullish structure despite what PPI may look like. So that's just a possibility. For AMD, AMD is holding up nicely. It's still kind of consolidating. We'll have to see if we can break through this wedge. If it does break this, we're going back up to the high towards 139, almost 140. If we reject here, we're going to be looking for 134.85 as support, followed by 132. But this is favoring upside a little bit more, in my personal opinion. For other factors out there, we have ARM. ARM is also not looking that great. We're actually trying to make a higher low relative to this low. If we break 120, we're going all the way up towards 125. If we lose support at 116, we'll be dipping all the way down towards 108. Looking at where we currently are, I think that we're attempting to uptrend. So we'll just have to see if that ends up being the case. In my personal opinion, I think that there's a good chance that this is going to be our support to be tested. So look for a little bit of a dip. If we lose support here, we'll be dipping into this imbalance. If we hold this, we'll try to rebound. We'll have to see. ARM could try to respect an uptrend, but I do see a little dip coming. So I think we're going to be dipping all the way down to about 115, if not lower. And then we'll see if we bounce or not. For Coinbase, Coinbase is also kind of stuck within this range. We have a very, very nice looking structure, but I just have to give this some time just to see how we end up moving. If we break past 202, we'll be looking for a bounce. If not, we turn bearish. For Amazon, we look a little bit weaker right here. If we fail to hold 166, we're dipping down to 162 all over again. If we hold this, look for 168 and then 171. It all depends on the data. So far, I would say that Meta looks a little bit more bullish. We have a nice looking accumulation structure. If we hold support, we'll be looking for 525. If not, we start dipping to 505. So give it some time. For Microsoft, look at resistance around 412. Look at support all the way down here towards 402. We're kind of stuck in the middle, but I think this might try to rebound for 412. For other factors out there like Google, Google is actually, I think we could be approaching 168. That's going to be our gap fill if we're bullish. If we're bearish, we're coming back down to 161. I think it might return to 161 because we're failing to hold our 20 EMA. So just be careful with it. Just for a few more, the 10 years dipping. This is going to make a big move depending on PPI. The VIX will also make a big move. We're going to see if the VIX gets a bounce or not. We still have this gap above to fill, so we'll see. The VIX is still technically on a downtrend, so we'll just have to give it time. The dollar is also indecisive, so give it some time. So, with that being said, guys, I want to thank you all so much for listening. Hope you guys have a great day. Just know there's a lot of stuff going on around the world, especially involving the situation in the Middle East, and we have big data coming out. So we'll have to see how things look to see a very, very big move. Some stocks look a little bearish, others look more bullish, so the market's all over the place, but the indices held up relatively well, so we'll just have to give the market time, and we'll see how things end up looking. I'm going to kind of step back and just give the market the time it needs, and we'll talk about how things look going into tomorrow. Thank you for listening. Have a great day, and peace out.